This is Taking Stock on ENCA. I'm Bruce Whitfield, and this evening taking stock with the Chief Executive of Anglo American Platinum. His name is Chris Griffith. When Anglo American Platinum took some very tough rationalisation decisions about 5 years ago, the rest of the industry seemed intent on keeping its head down. Anglo American Platinum now is riding the wave of higher platinum group metal prices, and for the first time in years has paid a dividend to its shareholders. Is the environment, however, ripe for expansion? Chris Griffith was one of the chief executives at the recent Presidential Investment Summit who made multi-billion rand commitments to investment in South Africa. He joins us on Taking Stock this evening. The big commitments that you made to investment in South Africa, how much of that was scheduled CapEx, stuff that you would have had to do anyway in the normal course of business, and how much of that was new money committing to new projects in South Africa?
So, Bruce, thanks for the opportunity. Some of that was commitment capital, but I think even that was capital that was already committed. But I think in itself that is a positive message to say, look, we continue to invest for the long term in our businesses. And that sends a message that we're here, we're investing, and we're going to be here for a long term. But in addition to that, there was actually new capital that we are committing that hasn't been previously announced. Some of those are small, fast payback projects that require additional capital, but in an environment where the investment horizon in South Africa is positive, we think that it's the right time to invest in those kind of projects. Examples of that are a new chrome plant at Amandelbult, a new chrome plant at Madikwe, a new chrome plant at Mototolo. So all that's new capital and that has not previously been announced. But in addition to that, we're working ourselves as Anglo Platinum on two major expansion projects that probably finish the project studies by the end of next year. And then there will be, in addition to what has been announced, our feeling that we are likely to at least announce one bigger project for growth in Anglo Platinum going forward.
I want to talk to you about the mining environment in the context of the mining charter perhaps a little bit later, because it's a crucial discussion to have in terms of whether or not this is an environment that is ripe for investment with Gwede Mantashe now as the Mineral Resources Minister. The environment in which you're operating, if one pays attention to the platinum price, and 1 week can go up $50, it can go down $100 the next. The platinum price, although critical to a business like Anglo American Platinum, is almost insignificant relative to a basket of platinum group metals, many of which many of us would never have heard of before. But actually, platinum is quite a depressed metal relative to others like palladium and another one called rhodium.
So that's absolutely the right way to look at our business. We are a PGM producer, so we produce platinum group metals. Platinum is important to us. About 50% of our produced metals is platinum, so when the platinum price is down, it does have an impact on the business. But palladium, so as you correctly point out, some of palladium and rhodium we often don't think about. Palladium is now $300 an ounce higher than platinum. It accounts for 30% of our production and has gone up about 50% so far this year. Rhodium has doubled in this year and is about 10% of our production. So when you look at the basket price, actually the basket price is showing that the PGM fundamentals are in fairly good shape. And so we're between 15 and 20% up in dollar terms so far this year.
I mean, that's a nice case study for South Africa, especially with the rand as depressed as it is. One looks, however, at the uses of these metals. And, for example, platinum we know is used in jewelry, and we know it's used in diesel auto-catalytic converters, the things that make the fumes less toxic as they come out the back of a vehicle. Palladium's got similar uses, right?
Correct, yeah.
And so, again, demand for palladium, is that growing or is that fairly stagnant in the world? What's happening with that?
So I'll quickly run through platinum and palladium, because even platinum has got three main uses: jewelry, industrial, and autocats. So autocats for diesel has been the area that's been under pressure. And certainly when the US and China are at odds with each other around trade tariffs, that sentiment is affecting platinum. But if you look at industrial uses of platinum, about a third of all demand is growing at greater than world GDP numbers. So it's growing at 3 to 5% a year, very, very strong growth. And then jewelry is sort of flattened out after a couple of years of decline. So we've got 60% of platinum demand is actually either growing or flat, with very small reductions in the autocat business. So if you look at platinum fundamentals, not nearly as negative fundamentals as the headlines and as the declining price would suggest. Palladium, on the other hand, where we see, which is used in the auto catalysts predominantly of gasoline or petrol cars, that continues to grow very strongly across the world and is set to continue to grow. And where we've got electrification of the drivetrain happening, most times it's hybrid. And in the hybrids, it still uses palladium at about the same ratio. So actually the demand segment for palladium is growing very, very strongly, and it's dragging rhodium along with it. And at rhodium at $2,500 an ounce now, palladium at $1,150 an ounce, very, very strong fundamentals are driving very solid price increases.
So when you look back at the decisions you took 5 years ago when you started right-sizing and resizing the Anglo American Platinum business, you cut back on shafts, you mothballed some, you closed some, you sold some, you reduced your workforce very significantly in South Africa. Were you too aggressive back then based on the environment into which we're going for PGMs?
No, we weren't too aggressive. We needed to do what we needed to do. And some of that is actually helping the market now. And as we see, because every time we were cutting back on a platinum ounce, of course we were cutting back on half a palladium ounce and a quarter of a rhodium ounce. Again, what the market wasn't really seeing is that actually overall the metal to the market was coming down where we were making losses in those mines. So in the past we were producing ounces at a loss. We were actually just shooting ourselves in both feet because we were forcing the prices down with loss-making metal. We needed to take loss-making metal off the market, and we did exactly that. And I think what we're seeing now is, and because we did major cuts every single year for 5 years, you know, we shut the Rustenburg shafts, we shut some of the shafts at Union, we put mines on care and maintenance. We weren't too aggressive, and I guess with hindsight, some of what we were hoping we could turn around, like Baconi, perhaps we should have done a bit earlier. But we needed to do all that work over the past 5 years.
I mean, we look at, for example, Marikana stands out in public memory as a tipping point for the image of the platinum sector in South Africa, the basic wages, the emergence of AMCU as a very powerful union in South Africa. We now see, for example, the Lonman and Sibanye tie-up is being threatened by strong union action, people demanding higher wages. I mean, is part of the South African platinum sector doomed, do you think, as a result of the very high cost of production that some of these guys face?
I think the conventional, deep, older level shafts, it's just a matter of time before some of those shafts are shut forever. I think that is just a fact that many of those mines are actually nearing the end of their lives anyway. And as you far from the shafts, it's conventional mining, productivity is low. In those mines, I think in the not too distant future, you're going to see, as those mines sort of come to the end of their life, you're going to see less new capital going into those mines where, frankly, it's very difficult to see under these kind of prices that you can get a return. So I think with some of those kind of operations, you're likely to see that those sort of taper off now. And investment goes into what we should be doing, more productive and lower cost, and frankly, more worker-friendly environments that actually, you know, our kids, that's where they want to work. They don't want to work in the kind of environment where their parents worked. And so I think we need to modernize the mining in South Africa, otherwise we won't have an industry in South Africa. So a more modernized, a more productive, and a place where we can generate returns for shareholders, make money, make profits so we can invest in some of the other things like taxes, like royalties, like in community investments. We can't do that if we don't make money, and you're going to see the mining industry in South Africa migrate to more modernized investments in mining, or there won't be investment in mining.
And one has to then ask the question whether or not that means that there's going to be as much demand for labour into the future as mining becomes more efficient. In many parts of the world, mining is increasingly mechanised. What is the future for the platinum mining sector in South Africa on that basis? More with Chris Griffith in a moment.